when it comes to management accounting, right? As a management accountant, you are still an accountant and you have to comply with the IFAC Code of Ethics. Remember that even ICA is under IFAC, okay? So the IFAC Code of Ethics is very important in any paper you take in ICA, not only management accounting, because you have to abide by these principles as an accountant. Okay, so accountants in business may sometimes find themselves in a situation where their professional values are in conflict with their responsibilities in their job. The International Federation of Accountants, which is IFAC, publishes the Handbook of International Code of Ethics for Professional Accountants. That is the code. The code provides guidance in situations where ethical issues may arise. So this code provides some principles which we are going to use to deal with ethical issues that arise in our normal business. I get it as accountants or in our normal transactions as accountants. Now, the whole thing you must know is that ethics, when we talk about ethics, you're talking about what? Some set of moral principles or moral codes of conduct that we must abide by. I get it. Now, the International Federation of Accountants brings this code that we have to follow, and ICA also subscribes to this code. All members and student members of ICA are required to comply with this code of ethics, and it applies to both accountants in practice and in business. When we say accountants in practice, we mean those who are in practice as auditors, okay? And when we talk about accountants in business, we mean those who are working as accountants, like they've employed them and they are working. They are not working as auditors in practice. Is that understood? So the code sets out 5 fundamental principles of ethical behavior that accountants needs to follow. So we have integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Now, these things, they may feature, you remember the day we were going through the syllabus, I said they may feature as part of what? Regular exam, right? So you can use PICO to remember them, PICO. So you can use your P to remember what? Professional behavior. Your I goes for integrity. C goes for confidentiality. Another C goes for competence and due care. And then we have O going for objectivity. Okay. So I use PICO. Some people prefer COPIP or PIPCO or PIPOC. It depends on how you arrange it. With that one, they use professional competence and due care for another P, then the C becomes confidentiality. I hope that is okay, but you must remember these principles because in the exam, 1 or 2 of these principles may be breached and you have to talk about it. Is that okay? Are we okay? Have you put it down? So we are going to look at all these principles, then we look at how to apply them when a scenario is given. Please, have you written them down? Can we go? Can we move?
Yes, sir.
Okay. Now that we've seen these principles, we are going to look at them one after the other. So we first start with integrity. When we talk about integrity, we are saying that professional accountants should be straightforward and honest in all their professional and business relationships. So the word there is what? You should be what? Straightforward. The word there is what? Straightforward and honest in all professional and business relationships. So we are saying that when you're an accountant, you should have an integrity. And the key words there is what? This is what the examiner wants to see when you are dealing with a question. 1, straightforward. 2, what? Honesty. Are we okay? So these are the 2 keywords that we want to see in all your business and your professional dealings. So it implies not just honesty, but also fair dealing. We've seen another keyword, fair dealing. Okay, this is how I want you to learn. Identify keywords. That is what we use to mark. And what? Truthfulness. Okay. So we are saying that, yes, if you are following all these principles, then you shouldn't be associated with any reports, returns, communication, or any other information where you believe that that information contains what? A materially false or misleading statement, or where that return or report or communication contains statement or information which was furnished recklessly, or it is something that is hiding some information. Okay. or where such omission or obscurity would be misleading. You get the idea? So we are saying that when you are having integrity, you should be straightforward, you should be honest, you should deal with people fairly, and you should be truthful. Are we okay? That is the concept of integrity. I hope that is okay. Any question? Is that okay? If it's okay, you can tell me so I can move on.
Yes, sir.
Okay. So we move to the next point, which is objectivity. Now, when we talk about objectivity, we are looking at you being objective, okay? You not allowing what? As a professional accountant, you are not allowing bias, any conflict of interest, or undue influence of others to override your professional or business judgment. So you have two clients, right? Client A and client B. Client A pays you $100,000, which constitutes over what 95% of your normal revenue. And client B only pays you 10,000 Ghana cedis, right? And he's your smallest client, contributing about like 1% of your revenue. And these people have a case. Who are you going to support? 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 Yes. Who are you going to support? Nobody's talking now. A, because he contributes a larger portion to your revenue. So in this case, because of what?
Yes.
Conflict of interest, because of this monetary consideration you are receiving, you will be deemed to be on this client side, which should have been so. Assuming this client was the one who was right, then it wouldn't be fair to, be on this guy's side. I get it. This is why we are learning ethics. I get it. So we are saying that when it comes to objectivity, we are looking at what? Not allowing bias, not allowing what? Conflict of interest, anything that can cloud your professional judgment, not allowing undue influence where somebody can use money or something to influence you, or somebody has a greater bit. Let's say somebody has given you a loan, right? So if you are working for the person, you are scared that if you don't do the work as he expects, what happens? He may take his money, or he may charge you a higher interest. You get it? That is undue influence. Are you getting it? You shouldn't let that override your professional or business judgment. Is that okay? Does that make sense? So a professional accountant may be exposed to situations that may impair his objectivity. So it is impracticable to define and prescribe all such situations. There are lots of situations. What I've given here is a typical example. Okay, so relationships that bias or unduly influence the professional judgment of the professional accountant should be avoided. So anytime you're in a situation that may bring bias or undue influence in your transaction or your business dealings, you should try to avoid them or reduce those things to an acceptable level. Do you understand? So that is about what? Objectivity. Now we move to the next one, which is professional competence and due care. After that, I'll give you a scenario, and you all have to speak to tell me what you think has been breached in the scenario. Is that okay? So, practicing as a professional accountant. So, we are looking at professional competence and due care. Now, practicing as a professional accountant involves a commitment to learning over one's entire working life. As an accountant, you always need to keep learning. Things are going to change, laws are going to change, standards are going to change. You need to keep yourself up to date. That proves you are competent. Is that okay? So professional accountants have a duty to attain and maintain their professional knowledge and skill at such a level that a client or employer receives a competent service. So based on current development in practice, legislation, and techniques. So we are saying that you see, you have to attain one. That's the first thing. Attain what? The knowledge and skill, and maintain that knowledge and skill. So maintaining that knowledge and skill means go for training, go for CPDs. You see, you should go forward to what? Make sure that the client enjoys the best of knowledge. Are you getting it? So you shouldn't be stuck in the past. I hope that that is clear. So professional accountants should act diligently and in accordance with applicable technical and professional standards. Are you getting? That is what we call due care. So we see professional competence, which has to do with what? Attaining one and maintaining your professional knowledge and skill at the knowledge that is required to serve your client or employer at the best bet. Are you getting it? Then at the end of the day, you should act diligently. Make sure you exercise due care, careful work. Are you getting it? And apply technical and professional standards. You shouldn't do work haphazard or rush when you are doing work, right? So CPDs or continuing professional development helps to develop and maintain your capabilities and enable you, the professional accountant, to perform competently within the professional environment. Now, though it is not here, but let me guide you so that you can answer ethics questions well. Anytime any question has to do with professional competence and due care, then there are some factors. These things, they are not in the book. You need to write it down. There are some factors that can cause an accountant, I get it, not to exercise professional competence and due care. Have you written it down? Or there are some factors that when we see, or it can cause somebody not to be competent or not to show due care. Have you written it down? So there are three factors that we mostly consider that will cause an accountant not to, be professionally competent or show due care in his professional dealings. So the first is inadequate time. Okay. So when the accountant, so usually I use rate, which is resources, information, and time. So if the accountant does not have enough time, then he cannot learn. Do you understand? For instance, if you don't have enough time, you cannot even learn to pass your ICA. True or false? True or false? So not having adequate time can cause you to be incompetent. 2, when you have inadequate resources, your resources are not enough. You are doing this course, for instance, you do not have a textbook, you do not have the right materials, you may not be competent enough. I get it, you may not do the right thing because you have inadequate resources. Then 3, we can look at inadequate information. So if you do not have enough information about something, then you cannot work on it well. I get it. That's why we are saying that what you should make sure that you acquire the requisite knowledge and skills at such a level. I get it, based on current development in practice, legislation, and technique. So if you don't have this sort of information, then you will not be competent enough. I hope that is okay. So please remember, every time you talk about competence and due care, I want you to chip these things in to help you to explain them well. Hope that sounds fair. Okay. So we are done with professional competence and due care. We move to confidentiality. So confidentiality, we are saying that with confidentiality, you have to respect the confidentiality of information. In simple terms, we use the word secrecy of information, right? You have to learn how to keep information secret. So information that you acquire in your professional and business relationships, you should not disclose them without proper authority or unless there's a legal or professional right or duty to disclose that information. You get it? So the thing about confidentiality is 2 things. 1, do not disclose without proper authority. Do not disclose the information without proper authority. And 2, do not use information acquired to your personal advantage. Okay. You do not use information that you have acquired to your personal advantage. Personal advantage. Why are we saying this? We are saying that, okay, in a business, let me explain that personal advantage. you are working for a client and then your wife holds some shares in the client. And recently you notice that the company wants to sell, or their share price is going to drop. Because of that, your wife can lose. So you go and tell your wife that, you know something, let's sell the shares in the company because it's going to collapse. Or maybe their share price is going to rise. You tell your wife that, you know something, because you have shares, let's sell them and let's make money because the share price is going to rise. You get the idea? So these are some of the things that you shouldn't do in terms of confidentiality. You don't use information to your personal advantage. You get the idea. And also, you don't disclose information without proper authority. These are the two things that you should know when it comes to what confidentiality. But when it comes to confidentiality, though it's not deep in management accounting, I want to go deep for you. So there are circumstances where you should disclose information. Okay, so there are some circumstances where you should what? Disclose information. So circumstances for disclosure. These circumstances may be what? Compulsory, or simply, let me use the word mandatory. So there are mandatory circumstances where we can disclose information, and there's also voluntary circumstances where we can what? Disclose information. So information, you have to disclose information. I get it. Or when you are disclosing information, there's a compulsory aspect of disclosure. One, where the client has been involved in something like money laundering. Okay. So when the client is washing dirty money clean, or has money from criminal proceeds, maybe there's terrorism. Okay. So the client is involved in terrorism or criminal activities, not so. So there are a lot of things that, so far as the thing spells some sort of what? Illegality, tax evasion, all these things, treason, all these things are things that you should what? Disclose. But when it's voluntary, then you only disclose when, one, you have permission from the client. Okay, so the client has given you permission to disclose. If the thing, there's a legal, okay, another one that is compulsory is when there's a court order. Okay, so when there's a court order, the law has required you to disclose. Yeah, when there's a legal right to do so. Okay, so you feel the need that you have to disclose. Three, you could even talk about when the thing is of public interest. You think the public has to know this. So this one is also voluntary. Are you getting it? So voluntarily you can disclose this. So there are circumstances where you have to disclose information. So anytime you're talking about confidentiality, you can chip this in. And I'm telling you, the good marks are going to be won by you. Is that okay? So you can put them down, and then we move to professional behavior, and we look at the threats that accountants, or the things. When we say threats, we mean factors that make accountants to breach the PICO, are you getting it? The professional principles. So these are factors that allow accountants, or that must be present. Are you getting it? That will not make accountants to what? To comply with the objectivity, integrity, confidentiality, competence, and professional behavior. That is why we call it threats. Okay, so here we are going to look at threats for accountants who are working with an employer. Okay, not an accountant in practice. Accountants in practice are those who are working as auditors. Their threats are the same, but with auditors, we go further with other threats. So here we are looking at accountants in employment or accountants in business. Okay, not accountants in practice. I told you accountants in practice are auditors. Shall we proceed? So that is one thing I want you to know and understand. The final thing is professional behavior. When we say professional behavior, we are saying that what? Don't do anything that would mess up or discredit or disrepute the accounting profession, right? Don't do anything that will give the accounting profession a bad name. So simply, you must comply with all the relevant laws and regulations and legislations governing the profession, so that you don't discredit the profession, right? And complying with professional behavior means complying with all the principles. When you comply with all the principles, then you have complied with professional behavior. If you breach any of the principles, then you have breached professional behavior. So I'm giving you this as a guidance when you are answering questions, so that you know how to talk when it comes to some of these issues in scenarios. Okay, so those are the 5 principles. And in summary, I told you use PICO. So you can use PICO to remember this. Okay, so professional behavior, complying with laws and regulations, not doing anything to put the profession in disrepute or discredit the profession, right? And a breach in all the factors is a breach in professional behavior. Integrity, being honest, truthful, and also in all your professional dealings. Straightforwardness, not being associated with any misleading information. Integrity, not hiding anything, not to be associated with any information furnished recklessly. It's all integrity. Competence and due care, keeping up to date, attaining skills that are what that can serve your client well, and maintaining those skills. Working and protecting information, working diligently, exercising due care. Are you getting it? Then we come to confidentiality, not disclosing information unless you have the appropriate authority and not using information to your advantage. And I gave you voluntary and mandatory disclosures, right? Then when it comes to objectivity, not allowing what bias, any conflict of interest, or undue influence to what cloud override your professional judgment. So these are the 5 principles. Now, how can they be breached? What factors cause these 5 factors to be breached? Okay, and that is what we call what the threats to independence. So in exam, how can they ask you this question? They can ask you, one, what are the threats to objectivity? Okay, this is a question they can ask you. Two, they can ask you to provide ethical threats. So ethical threats, or they can say ethical risks. It depends on who is asking you the question. They can also ask you threats to independence. Okay, so there are different ways, or the question can be put this way. Factors that will influence the management accountant of maybe RB Limited. Also, not to maybe complete the report on time, or factors that will maybe influence the management accountant of so and so limited to breach, I get it, maybe the code of ethics or something. So there are many ways that these questions can be provided. Hey, the noise. There are many ways that these questions can be provided. Okay, and once these questions are provided, you must be ready to deal with it. So I've given you all the different ways that these questions can be provided. So we are going to look at them one after the other, and we will understand them before we move to our next lesson, because this thing may feature regularly as part of a management accounting question. Okay. So I clear? Now we look at them one after the other. So here there's a caveat or a preamble which says, working for an employer should have no bearing on the requirement for accountants to respect the 5 fundamental characteristics or principles. The work of accountants will often further the aims of the employer, and this is not a problem, except when circumstances arise that can create a conflict with their duty to comply with the fundamental principles. Threats to compliance with they've given you another way they can put it. So sometimes they can ask you threats to compliance with the fundamental principles. They may arise due to, so we have these ones, okay? And I'm going to give you a way to remember these ones, okay? So you can use the word as if to remember them, okay? As if. So you have advocacy, self-interest, self-review, intimidation, and familiarity. Are we okay? So advocacy threat, self-interest threat, self-review threat, intimidation threat, and familiarity threat. Are we okay with that? So these are the threats that we have, and we are going to look at them. So I've given you this mnemonic so that you always use this to remember, okay, as if. So kindly remember as if. Okay. Now, we take them one after the other, but the whole thing is that when a scenario comes, one thing we've noticed is that it's difficult for students to identify what is in the scenario. Now, anybody who is doing any kind of scenario, it doesn't matter which subject you are doing it, management, accounting, or FR, wherever you see a scenario, I want you to adopt this method. We call it P, okay? So I usually use P, or you can call it PEA. It depends on how you want to look at it. So P stands for point. What is the point you want to talk about? What does it mean? Explanation of the point. Then finally, you talk about evidence. But when you look at the second one, I've written A, which means what? Application to the case. So what you do is that if I talk about maybe a guy who took a loan from his boss, right? Took a loan from boss. I may take this and take it as my point. Loan from boss. That is the point I want to talk about. So you can easily score any paper if you know how to answer theory questions very well. Because I told you management accounting, the paper is mostly spread 40% theory and what? 60% calculation, which still includes some commentary and maybe some interpretation, right? So you could say it is 60-40 in essence, because every calculation you do in management accounting, you must comment. If you are that type that never comments on whatever calculation they do, then your chances of passing management accounting are slim. Because with management accounting, you always have to what? Comment. Okay. So if I'm saying loan from boss, I must try to say that taking a loan from a client is ends up what? Not making this the person comply with maybe objectivity, right? It may cloud the person's professional or override the person's professional judgment, and hence it helps in breaching objectivity. So evidence from the case is what you have talked about, right? So you've explained it and you've given evidence from the case. Therefore, this will constitute what? A self-interest threat, because it comes with something that will benefit the guy. So it's a self-interest. So when you're able to answer questions this way by talking about the point you want to talk about, what the point means, and then evidence from the case. From the case, this and this is what it means. I think you should be fine. This is the best way you can answer questions professionally, and you are never going to lose marks. So we've seen them. Asif, please write it down. Asif. So in audits, I prefer massive, okay? Mostly for accountant in practice, but you can still use massive. Instead of management threat, you can add here management pressure, okay, for the A. Now, why management pressure? Now, accountants who work as management accountants or financial accountants are mostly under pressure from management, because management may tell you to manipulate some results you don't want to manipulate. They may tell you that they will not promote you. People face this at work, right? They will not promote you if you don't do something that they want you to do, which may be illegal, or it may be some document you don't want to prepare. So you can make it massive and make it management pressure, okay, as something new that you wish to add, so that when you're answering questions, you may go for it to say that what management accountants mostly face this kind of problems. Are we okay? So with that being said, we can proceed. Now, accountants in business are often responsible for the preparation of accounting information, and they must not prepare financial information in a way that is what? Misleading. However, threats to compliance with the fundamental principles may arise in the area of performance management. For example, where accountants may be tempted or may come under pressure. See, the word pressure, you see, I was talking about management pressure. So they may come under what? Pressure to produce misleading information or misleading performance reports or forecasts. And it's all about what? Pressure from management. Pressure from management. So management pressure is the main risk or the main threat to compliance, which mostly we ignore, because in every business, especially when you are an accountant, it's not easy. So accountants responsible for the preparation of financial information must ensure that the information is technically correct and is adequately disclosed. So there is a danger of influence from senior managers to present figures that inflate profits or assets. This puts the accountant in a difficult position. On one hand, they wish to prepare proper information, and on the other hand, there's a possibility that they might lose their job if they do not comply with their manager's wishes, just like what I said, right? So this management pressure Mostly in a scenario, they'll tell you that you just finished your ICA exam and you have been hired as the management accountant. This alone tells you that this is your first job and you wouldn't want to lose it. So they might influence you. So you must identify some of these principles from what, or these key issues from a scenario to talk about it. So remember, point, explanation, evidence from the case that the accountant may be facing the threat of management pressure, which may be intimidation, right? You can still put management pressure under intimidation. They are sort of intimidating you, so you cannot comply with the professional principles, and therefore your objectivity and integrity may be breached. So you are no longer independent. You've been compromised. I hope that makes sense. So we move to the next one, which is the very first one, which is important, which is self-interest rate. So self-interest rate may occur as a result of the financial or other personal interest of an accountant or their immediate or close family members. Self-interest may tempt an accountant to withhold information that might damage them financially or get them into trouble with their bosses. So any personal or financial interest that you get, I get it, may constitute self-interest. Okay. Now, if they promise you some gift and hospitality, they've promised you some travel abroad, they've given you some incentive compensation arrangement, are you getting it? They are giving you plenty, things, they are giving you loans and other things. Then sometimes you feel reluctant to do the right thing. You get it? Because you only abide by what they will give you. That is self-interest, right? Because of some personal interest, you may want to keep shut and enjoy, keep quiet and enjoy, right? So examples of circumstances that can create self-interest threats in performance management include: one, incentive compensation arrangement, which is an accountant's bonus, which may be dependent on improvement in their reporting efficiencies or profitability. So look at this accountant. They are saying that, when you make profit of 2,000 cedis this year, you'll be given a bonus of what? 20%. So if they make a profit of 900 and what? 99, this guy can easily add 1 cedi, not so round it off and make it 2,000 so that he can enjoy his bonus, right? Because of this incentive, people are tempted to always manipulate the account. Okay, these are one of the self-interest, the things that can make incentivize accountants to not comply with objectivity. Also, inappropriate personal use of companies' assets could be one, because of their personal interest. Okay, because of their concern about job security and commercial pressures from outside the employing organizations, they may attempt to do the wrong thing. Okay, these are some of them and some of the things that I said. Some people hold shares in some particular clients and so on and so forth. So they do not want to do the right thing. Okay, so please remember this anytime you are sort of dealing with management accounting questions around ethics. So let's look at a simple issue that ICA presented, because I was telling you that now the ICA manual is where all your questions come from. They are framed from here. So this same question can be framed and brought as a question, but you have to talk more, right? So they are telling us that Adom is a member of ICA working as a unit accountant. He is a member of a bonus scheme under which staff receive a bonus of 10% of their annual salary if costs for the year are less than the budget. Adom has been preparing a report on costs, and he has found that by omitting some items of cost, the reported costs will just come in under budget, making him and his colleagues eligible for their bonus. So you see, so in the exam, maybe they may not bring this analysis, but they may frame it and use a different person's name and tell us to analyze or maybe bring out the ethical scenarios in the question. And here you see that there's a bonus scheme. Are you getting it? So there's a chance that this guy will not be honest. He's going to breach integrity and let this bonus scheme cloud or override his professional judgment, objectivity. So these things will be breached because of this 10% bonus that they are giving him. Are you getting it? So Adom then faces a self-interest threat. He must ignore the temptation to falsify the cost figures. Why? Because man for pay school fees, man for chop. You get the idea. So we are tempted to do things that will benefit us and create wealth for us. You get it? So that's an example of self-interest rate. I hope you wouldn't forget. Okay, so self-interest rate, anything that is financial or non-financial that will benefit you in the business is a self-interest rate. Okay, so self-interest rate, there are things that cause self-interest rates. We've seen them: compensation agreements, bonuses, gifts and hospitalities, loan to and from the client, and so on and so forth. Things that will benefit you. Okay, both financial and non-financial. Now, self-reviewed threats occur when a previous judgment or decision is reviewed by the person who made the original judgment or decision. So the temptation may be for the individual concerned to confirm on review that the original judgment or decision was correct when it was not, instead of admitting a mistake. So in simple terms, self-review threat is simply checking your own work. How can you check your own work? Let's say, assuming you are the accountant, the head of accounts, right? And you are the same person who prepared the accounts, and you are the same person reviewing the same account. How can you spot your own mistakes, right? So where there are no segregation of duties, especially in a working organization, it is difficult to control this threat, okay? Because always the same person will be preparing and will be reviewing. He can't spot his own mistakes. Is that okay? So when it comes to self-review, it is simply checking your own work, okay? This long thing can summarize it to checking work that you have already produced. And mostly you will not be firm to admit your mistake. I get it. So let's take a simple example here. It says what? Wedi, an accountant with a manufacturing company, worked on a costing exercise for a new product. He estimated that the unit cost for the product would be 100 cedis. Okay. However, he made several mistakes in his cost estimate, and the actual unit cost was 40% higher than he has stated. So, if you see, also when you are looking at these things, do not only look at what was done wrong, look at the implications on the accounts. That is what you, as an accountant, we need you to do, because if the mistake that you have done will let costs go higher by 40%, that means your profits are also going to drop by 40%. Do you all agree? Because increase in cost is a reduction in profit. And that is what we want from you as an accountant. Be able to tell us how the impact of everything that happens affects the accounts. Okay. So after the product went into production, Boedi was asked to review his original cost estimate and report on its accuracy. On carrying out the review, Boedi was alarmed to find the errors that he made and was concerned that admitting his mistake would damage his career prospect with his employer. He was therefore tempted to report the actual unit cost for the product. Not so. And that the actual unit costs were very close to his original estimate. So this is clearly a self-review threat. The organization itself do not have proper controls, because you should segregate the duty. You get it? These are some of the things I want you to be chipping in scenarios once or twice when you are dealing with scenarios. It helps to tell lads that yes, this risk can be minimized, or this threat can be minimized a lot when there's enough segregation of duties. Okay, that's the best safeguard to this kind of threat. So analysis, it says what? Boedi faces what? A threat to his integrity and objectivity from this self-review. Boedi must admit his mistake and report the correct actual cost of the new product. Okay, so that's how they answered it. The next one is advocacy, which is usually rare, but you need to know about it. Now, an accountant in business may often need to promote the organization's position by providing financial information. So as long as information provided is neither false nor misleading, such actions will not create an advocacy threat most of the time. But what we mean by advocacy is when the accountant is seen to be promoting the client, okay? So most of the time, you are the accountant or the auditor of the client. Mostly, the reason why they've summarized this here is mostly in relation to audit. That's where you mostly have this threat. So you are the auditor of the client, then the client has a court case, and you, the auditor, you are seen defending the client at court. Master, are you a lawyer? The client is doing float, then you are on top of the float and you are dancing, buy one, get one free. How will people trust your opinion? Meaning you are supporting or promoting the client. So you are acting like an advocate for the client. You get it? So hence the name advocacy trait. You are acting as if you are supporting the client in whatever he does. So people will not trust whatever you do because you are seen to be the client's friend. Okay, but in terms of accountants in employment, then if you provide information or you're even supporting the client and the information is not somewhat misleading, it may not necessarily create an advocacy threat. But in practice, it does. When I say practice in accounting, I mean for auditors, people who are in audit practice. Okay, so let's look at the next threat, which is familiarity threat. These threats occur when, because of a close relationship, members become too sympathetic to the interests of others. So example of circumstances that may create familiarity threats include: one, an accountant being in a position to influence financial or non-financial reporting or business decisions where an immediate or close family member is in the position to benefit from that influence. So long business relationships, if you are close to somebody, or family ties, all these things are examples of familiarity. Long association with business contacts can influence the context of a performance report. So all these things you need to know. When you get to performance, you need to also try to chip in some of these things when you are answering questions, because they are very, very important in the answering of questions. Is that okay? So when we come to intimidation threat, which are threats which occur when an individual's conduct is influenced by fear or threats. For example, from an aggressive and dominating boss, right? He's giving you pressure to do something you don't want to do. So example of circumstances that may create intimidation threats include: one, the threat of dismissal or replacement over a disagreement about the way in which performance information is to be reported, and a dominant personality attempting inappropriately to influence the content of a report which you prepared, right? Because of that, your boss will shout on you. You have no say. You have to do it for the guy. Okay. So that is the ethical duty of the management accountant. Now, there's one aspect that I would want you to discuss. Let's finish reading the preparation and reporting of accounting information, and then I will provide that aspect for you to understand. Okay. So one thing I want you to understand is the consequences of an ethical behavior. That means if you behave unethically, what consequences are you going to face? And as my student, when you are going to write the exam, I want you to always provide the consequences of unethical behavior, even if you are not being asked in the question. So you are going to say that from what Mr. Kuma has done, it could constitute a breach in integrity and objectivity, and the information that he disclosed may have breached confidentiality. Overall, he has breached professional behavior. Mr. Kuma would face the following consequences if he acts unethically, or because he acted unethically. Then you write consequences of unethical behavior. 1, imprisonment. 2, they may withdraw his professional certificate. 3, it could lead to death if it's very severe. 4, they could withdraw your professional license. 5, are you getting it? It may lead to collapse of business. So if you're able to write all these things, I don't think any question will come for you to fail, because you are on top of the game. Okay, so let's look at preparation and reporting of accounting information. Now, performance reporting involves the preparation and reporting of information that is used mostly by managers inside employing organizations. So such information may include financial or management information. For example, forecast and budget, performance statements, and performance analysis. Information must be prepared and presented honestly. So integrity is key when you are preparing reports. So threats to compliance with the fundamental principles, for example, self-interest threats or intimidation threats to objectivity or professional competence and due care, may be created where an accountant in business is pressured, okay, either by a boss or the possibility of a personal gain by himself, which is a self-interest threat. When you are pressured by a boss, it could be intimidation, management pressure to become associated with misleading information. So the significance of such threats will depend on factors such as the source of the pressure and the degree to which the information is or may be misleading. So remember, sometimes to assist you in exam questions, the exam support I will want to give you is that if you think that the threat is so severe, you can tell us in the question that you think, in my opinion, I think this threat is severe and these are the appropriate safeguards or how we should deal with them. Are you getting it? So the significance of the threat should be evaluated, and unless they are clearly insignificant, safeguards should be considered and applied as necessary to eliminate them or reduce them to an acceptable level. So this phrase, you can always what? bring them in scenarios where you are not so clear about them or where you are not so confident. Are you getting it? So such safeguards may include consultation with a senior manager within the employing organization, and where it is not possible to reduce the threat to an acceptable level, an accountant should refuse to remain associated with that information they consider is or may be misleading. So in that case, you can drop the work, write a statement of circumstance why you can't continue the work, or report the person who is involved with that information to a higher authority, or better still, seek legal advice. That's the best ethical resolution you can have, seeking legal advice. I hope that is okay. So that is about ethics. And I told you that you always need what? To add the consequences of unethical behavior, even if you have not been asked. So consequences of unethical behavior. Unethical behavior. Please write this down. So as an accountant, these are some consequences you are going to face, okay? So you can face imprisonment, withdrawal of license. That means if you are practicing, we can withdraw your license, withdrawal of license. We can also withdraw your professional certificate. That is one. You may lose reputation, loss of reputation, also. You may lose reputation, penalties and fines. You may pay penalties and fines, also. You may collapse a business, so collapse of business or collapse of company. Okay, so the business may collapse. It can even lead to death if it's very severe. Okay, some people, they don't take unethical behavior like joke. They will kill you. Okay, so these are some of the consequences of unethical behavior. And you remember I was telling you that when you get a question, okay, always, if it's about ethics, always provide the consequences of unethical behavior to balance the question off. Is that okay?